Ladies and gentlemen of the Caspa community, retail reinforcements are inbound as we speak. Wall Street Bets Crypto has discovered Kaspa and are targeting it as the go-to asset for the up-and-coming bull run. Having been in the trenches during the GameStop short sale, we're going to highlight strategies and tactics used by Wall Street Bets to find target investments. This will connect that legendary GameStop short squeeze to the up-and-coming, soon-to-be legendary Caspa breakout. And it all comes together with central bank monetary policy. Starting in the summer of 2023, this trend line representing the Fed's balance sheet quantitative tightening currently switched to quantitative easing for 30 days. Zooming out, this is that exact same chart, except for we're seeing just the tail end of it on that Caspa image. Back in 2021, it was quantitative easing. This means the Fed's building their balance sheet, buying bonds off BlackRock, State Street, and giving them cash to invest into the economy. This stimulates jobs and growth. The Fed stopped quantitative easing at an FOMC meeting in November of 2021. And ever since then, it's been nonstop quantitative tightening as they're selling their balance sheet off, reaping cash out of the system away from risk on assets. This is essentially bearish. A beat. There was that 30-day window, which didn't do a ton for altcoins, but it gave traders a massive amount of insight because Kaspa was the #1 strongest performing altcoin in the entire market. Therefore, anybody trained with Wall Street Bets tactics who understands how the quantitative central banking system, we knew for sure right then it's State Street, BlackRock, the biggest dogs in the market had to have been loading their bag with Caspa. Something had to be going on there. So we waited for that next FOMC meeting here on the 15th, and we just loaded our bag with Caspa under 2 cents. We were the first traders on social media to go all in on Caspa, and the FUD was unbelievable. ASICs are going to crash the market. It's going down to 1/10 of a halfpenny. Soon, Marathon Digital announced that they started mining Caspa right here in September. Therefore, the hypothesis that it was State Street and BlackRock buying the Caspa because they're the only ones that deal in treasuries, making it the #1 performing coin during quantitative easing, is obvious now, but back then you had to be trained by Wall Street Bets. Remember, we're still in quantitative tightening. So once the Fed flips to quantitative easing, once again, these same entities are going to start piling on Caspa because they know it has long-term growth potential. Jumping into the macro data, this happens in between the FOMC meetings when the central banks make big decisions like it's going to be rate cuts or it's going to be quantitative easing. A reduction in quantitative tightening just took place recently, and it was directly at the FOMC minutes on April 9th. Where they made it official, we're not going to be taking so much money out of circulation every month. That's when the altcoins started rally back to the upside. So there was PCE. This is about inflation, released on Friday, and unfortunately, it came in high. Now, this wasn't a total catastrophe because the inflation is only sticky. That means it's not increasing on the month over month. You see right here, this is the month over month. The previous month was 0.01. The projections of economists were it's going to be at about 0.01. And then when it actually came in, it was 0.01. So this means it's not rising up drastically. Had this been 0.02 or 0.03, there would be significantly more selling pressure right now. The year over year has had a slight uptick after 2 months of a downtrend. This means it's sticky inflation. It got bumped up a while ago, and they're having a hard time bringing it back down to that 2% goal. There's a bigger macroeconomic trend that just got completely annihilated. That is talks about a potential recession. This is a JP Morgan article highlighting the probability of a US recession is going down. It used to be at 60% and now it's 40%. Directly on May 15th, when the altcoin sell-off began, there's an ebook inside this description showing over half a dozen real-time posts coming out day after day after day, starting on May 15th, going over every detail on why this is the peak of this alt season breakout. Meanwhile, the rest of social media was talking about, we've got to load our bags. This is alt season. Everything's about to rip to the upside. I sold my entire bag and was waiting to position downside. And part of that reason, the reason Caspa sold off so fast is because of recessionary fears. This means while there's high inflation, like we were just looking at, it means that there's also going to be trouble with the labor market. And that can cause a total disaster. Because when they need to stimulate, it will just rise the prices of goods even higher and force big companies to lay off more workers. It's like a vicious cycle. Luckily, recession fears were crushed on Thursday's print. This is the durable goods. Now, let's get everybody up to speed on what durable goods was. The last durable goods print was on April 24th. 4 days before, there was a ceasefire declared between Russia and Ukraine, knowing that this print was going to come out bullish. While expectations had showed it would come in with a negative, in April, it came out like plus 16%, showing there was a lot of economic activity, even growth inside the United States, possibly from the trade wars. This was very bullish for altcoins because it was canceling recessionary fears. Typically, you want the durable goods and labor markets to go down, because the Fed's dual mandate is they're going to create a stable labor market, but not when it's overboard and creating fears of a recession. Last week's durable goods print was originally projected by economists around the world to come in showing lower numbers. The prior month was -7. Economic projections last week were -6 for durable goods this month. This durable goods was a surprise beat to the upside. Last week, they thought it was going to be a negative number. In fact, it's positive, just as big as the April one, proving we're not in a recession. So the odds of a recession are drastically reduced right now. For projects that are heavily traded by institutional investors, as we can see in the summer of 2023 with Caspa, that's why on May 15th, in my opinion, Caspa saw such a strong selling pressure, while the rest of the altcoins had sideways action, even a sucker's rally for some of them. Kaspa instantly started selling off because of its institutional connection. And that same connection, now that we have a bullish durable goods showing growth in the United States, the labor market print on July 3rd is already projected to show more jobs. While typically that's bearish because it delays rate cuts, which is undoubtedly happening. Don't mistake the projections for Caspa for the broader altcoin market. The rate cuts just got pushed back. We'll be lucky to get one rate cut in 2025 based on rising jobs and high inflation. It's just not happening. But oversold assets like Caspa are set up for a bit of a relief rally on the July 3rd labor market print, in my opinion, just getting us out of this super low recessionary fear level. Macroeconomic data is the Wall Street bet's secret to unlocking legendary trades like the GameStop short squeeze. And right now, these same secrets are highlighting Caspa as a go-to project. Utilizing them, we've been able to unlock insight showing when the market's about to change direction. Typically, crypto is a lot of range-bound trading with special catalysts that create upside direction or selling pressure. And it's the macroeconomics, whether you favor technical analysis or on-chain data, that add an additional layer of insight to help traders hone in on who's on first and what's on second. We use this skill set inside our VIP group to unlock insight about different sectors in cryptocurrency, what's going to happen in the future, all based on central bank monetary policy and additional layers of insight, whether it's technical analysis, on-chain data. We put it all together and get the full package. Right now, the total 3 and altcoin market cap is undoubtedly in a consolidation phase, in my opinion. Meanwhile, assets that are selected by institutions are ready for a relief rally now that fears of a recession are starting to be relieved by macro data. Thanks for checking out this video, guys. We'll catch you on the next one.